really want to thank everyone for taking time out of your schedules to join us today. We are going to be talking about risk mitigation and specifically on the architects and engineers hazard group today. Basically, the idea here today, we're going to give a general overview as to the program itself. Just kind of looking at the attendee list, there's actually a lot of names that I don't recognize. So hopefully this will be a good welcome to some of our newer producers or maybe some of you that aren't familiar with the A&E line. So I'm going to go through a quick overview of the program itself, and then we're going to specifically be talking about some things that are affecting the A&E industry today. And I'm just going to apologize right now. I'm getting over some allergies, so hopefully I don't sound too nasally for all of you out there. I guess first things first, just a little intro on Stuckey Company to our newer producers. Up on your screen right now, there are a few bullet points. These are all of the programs that we have in-house. Basically, the goal is to try and find a home for every submission. Obviously, today we're talking on the A&E program, that third one down, the Aspire A&E program. But you can also see we have the Safety Tech program, which is a professional liability program where we're the MGA for ACE. We've got a Harbor Guard program. We've got the Miscellaneous Professional, which is, I believe at last count, was over 300 different class hazards we can look at on that program with our carriers. We have Servicer Pro, which is an appliance repair program. We have the Element program for the green energy industry. Of course, we've got personal lines and a pretty robust commercial lines unit. So hopefully we can help you all out. For those of you that aren't familiar with me, I've actually got about 11 years of underwriting under my belt these days. My background started with the IT program I mentioned a minute ago. Spent some time there and then moved over to the miscellaneous and A&E side. I've done some work with program stuff like for lawyers and accountants and things like that. And also on the management liability for D&O, EPLI, fiduciary crime. So if you'd like to talk about professional liability, I'm an exciting guy. So why are we here today? Basically some things we want to go over. Like I said, I'm going to give you a general program overview about the A&E program specifically. Kind of went over some stuff with Stuckey. We're going to look at where the industry is today. We are going to basically, hopefully, identify how some of our insureds can help themselves from protecting against some risk, and what our markets can do to assist in the process. At the very end, we will have a very short Q&A session. I'll try and keep it brief. I know we told you guys it'd be about a half an hour, so I'm going to try and play in that window, and we should be able to accomplish that today. So first things first, and especially for those of you that are not familiar with us, what is the Aspire A&E program? If you've worked with us before, you know that we started it back, we launched the formal program in 2008. Prior to that, we were functioning essentially as a broker, just kind of in the open market space. And in 2009, we launched with a carrier named Aspen, and the program has definitely evolved over time. Today we actually have 7 different markets that we can go to, and we have different varying levels of authority with those markets, and I'll get into that a little bit later. But the idea there was, as you can see on your screen, it was meant for the smaller, the micro business, the smaller guys on the food chain. We kind of have a target market of firms that have 1.5 million in revenue or less. So we're definitely going for those micro businesses. The idea behind the creation of the program was to come up with coverage that is obviously easily accessible by everyone, has to be competitively priced, the coverage has to be clearly defined, needs to be broad to actually address all the exposures facing the architects and engineers, and all that ties in with the strong carrier markets that we have today. This slide here, there's a lot going on there, but just wanted to kind of pull a bunch to show everybody, again, especially those of you that are not regulars in the A&E accounts, there are a ton of different considered disciplines we can look at on the program. Thinking about each carrier, they have their own appetites, they have their own underwriting boxes, but generally speaking, what you're seeing on your screen right now is what I'll call the target for most of our markets. That's not all inclusive by any means, but those are the ones we tend to see more than anything else. Just kind of on that talking point, I do want to mention, because I get this question a lot, like civil engineers, for example. We might get a submission for a civil engineer, and depending on what markets have been approached, even if it's a minimum premium size account, right, you might see a premium with one carrier at $1,000. You might get another one at $2,500. You might see another at $5,000 for the exact same risk. And that exact risk, you know, we're talking small revenues. Maybe it's a retro inception policy. There's no claims. So why is there such a varying degree of premium on that? And I just want to touch on that. I mean, quite frankly, it's the marketplace. These carriers that we're using, and even the ones we're not using, they're pricing these coverages based on their book performance. Some of it has to do with class code, some of it's geographic location. But I just wanted to kind of point that out because I get that question a lot, and I will go into a little bit of detail on that later on as well. But you do tend to see a lot of variation on the hazard disciplines. And my mouse just died, so hang on just a second. All right, got my backup ready. Okay, sorry about that. So you just saw that huge list of all the different disciplines we look at. And I wanted to show this slide just to kind of illustrate a point. Basically, that list is the disciplines. That's only a part of the equation and what we're looking at when we underwrite an architect or an engineer. We also look at what they do, the project type, and how the project, what we call delivery method. How is the project actually done? How's it performed? And when you look at that list, not as lengthy as the other slide, but there's a few things on there that I would say maybe I'd call them problematic or difficult project types for a few different reasons. I mean, think back to that last slide. You saw things like structural engineers and biomedical engineering and construction design, both yacht design. And then you see a slide like this where we're talking about project types. Well, look at amusement rides, for example. You might have a guy that's an electrical engineer. 99% of what that guy does might be completely standard and, quite frankly, not scary. Well, if you've got an electrical engineer that's working on amusement rides, you're talking about things that might have some new, unproven designs. You're talking about safety issues. Think about bridges. Different parts of the country, you got different sized bridges and oceans and rivers we cross. Think about some of the design complexity of some of those bridges and projects. Nuclear and atomic, that speaks for itself. Tunnels, think about earthquake protection and things like that. Really, the sky's the limit there. And I guess the point I'm trying to drive home here is that there's really some serious and really some incredibly dangerous exposures that face design professionals today. And really the bottom line there, again, I know I'm driving this point home. Think about these last two slides. It's really not a matter of if a claim's going to happen. It's more like when. It's really not that shocking if you think about it. I mean, think about what can go wrong with all those listings we just put up there. And even today in our discussion, we're only going to, we're just barely brushing the surface of this stuff. What we're about to talk about, hopefully, is that second bullet point. Some of these steps that can be taken to minimize the risk. I mean, that's what we're all here for, right? That's insurance, minimizing the risk. And what I'm going to talk about here in a second is that third bullet point. You're going to see where the A&E market has been in the past few years and where it's heading. And I think you're going to find some interesting points there. This little image comes to us courtesy of AM Best. And we're looking at a 4-year snapshot there. And I know it is a couple years old, but it really highlights some things that we're seeing. look there at the 2005, that column on the left. You see that the gray background is the reserves of the industry that were reported, and that red line is the reported losses by the carriers from 2005. Not only can you see how high those numbers are, but they're almost level. And that's an industry-wide snapshot from 2005. So you think about each individual carrier, and there are some carriers that really lost a ton of money around that time. And you can kind of see as we look to the right, 2006 to 2009, you got a major downturn in 2006. 2007 went up a little, but it's pretty relative, and then it took a dip in 2008, and then it's about 50% higher in 2009. And even though that graphic doesn't even show it, that's pretty much the trend we're on right now, is it's going up again. Generally speaking, looking at that graph, you can see the reserves are pretty high to the industry, but you need to consider a couple things that are not represented on that chart. What that does not show you is the potential volatility around claims from these long-tail books. It's not showing you asbestos or environmental-related claims, which are on an uptick, as that's kind of, I guess I'll say it's just kind of become a hot trend in the industry over the past few years. Yeah, and again, I apologize because it stopped at 2009, but that is the trend we're seeing here today. And I am going to move to the next slide, but kind of try and keep that burned into your brain here for a second. Basically, from that 05 to 09 snapshot, I guess I'll just say that the 09 uptick is sort of leading to where we are today, and I'm going to call it a hardening of this particular hazard group in the market. And why do you think that is? Try and keep that in your mind. Why do you think that's happening? Because I'm going to circle back to that. The economy is obviously a big factor in everything. And when you think back to around the 06 to 08 time frame, that's really when we started taking a dive south. That's when a lot of these construction projects were disappearing. The funds were disappearing. And a lot of these professionals were bidding low on contracts. Like even when you think when we launched the Aspire program, I mentioned that we go after those micro businesses, the 1.5 million and smaller. So all those firms that were downsizing and laying people off, these guys are starting their own operations now. And if you've got a background in electrical engineering, and there's no contracts for electrical engineering in 2009, 2010, well, what do? You're going to take whatever hits your plate. So some of these guys are going out of their expertise here, and they're taking whatever they can. And keep that in mind in a second. We're going to come back to that too. Actually, on that topic, think about that. If you're working outside of your area of expertise, it's going to lead to claims. It's going to lead to messed up jobs. They're working out of their realm. So logically, when that happens, like I said, the errors are going to happen, the claims are going to follow, and then you're going to see the underwriting from these carriers adjusting accordingly, and that's kind of where we're at right now. I would like to take a second and point out Sean Moynihan over at Property Casualty 360. He also pointed something out too, and basically that's that the standard of care is evolving for these design professionals and what they're being judged on. And it's becoming increasingly common for a firm's design to be called into question after doing the actual construction. Maybe the construction professional is actually performing the work or cutting corners to save some money. Everyone's looking at that bottom line these days. Well, when you start cutting some corners and some sort of an accident occurs, think about a railing or a balcony issue that might have had some corners cut on it. What happens? Well, the architect is going to be named in a lawsuit. That's what's happening. Even though the architect might not have been directly responsible for it, they're getting drug into these lawsuits and these litigations. And kind of one last factor I just want to point out, the price increases, a lot of that, you think back to that last slide from the carriers themselves. During the construction boom years, when these contracts were abundant in nature, just the opposite of where we are today. They were abundant. So they overextended themselves and they failed to deliver on some of the projects that they actually agreed to take on in the first place. So it's kind of interesting because just in the past decade, you've got extremes on both sides of the spectrum that the carriers are kind of adjusting for. And for those of you that don't do a lot of A&E business, if you've ever seen loss runs, you'll know that the severity of these claims tends to be a pretty high dollar amount when it happens. So just kind of some general current issues and trends going on right now. I will be the first to point out that I am no lawyer, but I think they would all agree with and tell you this. The most obvious trends out there is the continual, what I'll call the pushing of the bar, so to speak, by the plaintiff counsels. And I specifically noted Florida, Texas, and Washington. I'd say over the past, I'll just say 5 years, those have become extreme litigation hot grounds. I'm not sure that's a good thing, but that's what we're seeing. Generally speaking, it's becoming more difficult to seek indemnification. And I gave Texas its own little listing there. Quite frankly, from an A&E perspective, it's sort of becoming a problematic territory. And really not just A&E, that's kind of all professional liability. And the reason for that is there are some various state and territory statutes that are making it increasingly easy to sue somebody. So Texas is kind of starting to take that crown away from California, and we're seeing a lot of litigation down there. Of course, there's economic factors, as you can see listed up there. I kind of mentioned it, but the economy's had its ups and downs over the years, and even just thinking over the past, well, heck, just say the past 3 decades, lots of ups, lots of downs. And you consider the availability of the funds for these projects, or how these economic swings can impact a project that maybe it's signed off on, but it hasn't been started yet, or maybe it's been started but not paid in full. So there's definitely some economic impacts that come into the equation there. Continuing on that topic, I addressed the legal counsel factors, and quite honestly, I think this kind of speaks for itself, but it is such a huge, vitally important factor, specifically for the architects and engineers realm. If you're reading that up there, I know it sounds like common sense. You know, you need competent representation. The reason for that, obviously, the longer the suit goes, the more expensive it's going to be for all parties involved. The need for the understanding of what actually is occurring is vital, and almost as vital as the early resolution. I mean, you think about any A&E program from any market you work with, you need to have qualified claims reps and an educated and experienced legal counsel that really doesn't, you know, that knows what they're doing, that are going to create that value because they're going to be able to address these specific issues. If you don't have that in place, think about it from everyone's perspective. You know, the insured's going to be damaged. Short term, they're going to pay a claim. Long term, their pricings are going up. Their premiums are going to skyrocket. The carrier is obviously going to have a payout. If they've got an educated legal team or some good claims reps, they're going to be able to nip some of this stuff in the bud before it gets too crazy. You know, the costs are going to need to be recouped by the carriers if this happens on, you know, more than one account, which kind of ties into that point earlier. You know, moving along, kind of to that point, this really isn't an opinion. I mean, this is important for the A&E clientele. And when you think about the exposures they faced and how the market is today, it kind of begs the question, maybe to you as the producers, you as the direct contact with these applicants, these insureds, who are you placing the business with and why? I mean, I put down there at the bottom, you better be sure to choose the right partner, and I firmly believe in that. I'm with you guys. I get it. I know price drives a lot of the business, especially on the smaller accounts that our program is kind of geared toward. But these risks we see every day that just price shop, and, you know, year after year they move coverage over, you know, say $100. They're really not doing themselves any favors. I mean, I kind of said it earlier. The claims, they're going to come. It's just a matter of when. whether they deserve it or not. And that's a key thing too. I'll point that out. The claims are going to come. They may have done everything right, but the simple fact that they were involved with some of these projects, the lawyers, the legal people, they're going to sniff that out, and they're going to get drug into these situations. And they better have a partner that understands the risks that they're associated with. They better have a partner that knows how to defend them, and furthermore can actually be able to financially defend them, because they're not some kind of fly-by-night program or some of these markets we've seen enter the A&E space that are trying to be players that are, quite frankly, doing it the wrong way. Just looking at those 5 points on the screen there, all those reasons are reasons that you should consider when you are placing the coverage, obviously. But just keep some of those in mind, because price, sadly, is more often the most common factor. But the 4 that are below price usually have a lot of weight in what happens after the coverage is purchased. And some of the ways the carriers can help. I mentioned earlier, we've got 7 different markets that we use. In those 7 different markets, all 7 of them are a little unique in their own ways because of things they offer. For example, I've put several bullet points up there: pre-claim assistance, contract review services, some of the things I've already mentioned, like experienced claims reps and how that can be important. But think about some of those. I mean, seriously, take a minute and think about those when you're placing a risk. When you're having those face-to-face discussions with your clients and they're telling you what they do, some of this should sort of be popping in your head. For example, the pre-claim assistance. If you're going to get assistance as a feature offered by some of these markets, maybe that's going to be more beneficial to someone who has some scarier project types. Think about, I'll use Hiscox for example. Hiscox is one of our markets, and they actually will pay for the first hour for the insured policyholder to consult with a lawyer. Typically those issues are taken care of in an hour, sometimes they're not, but the simple fact that they have access to that is huge, and you're talking about spending an hour of time versus a potential policy loss depending on how these contracts go. Speaking of the contract itself, that second bullet point, the contract review service, we have a MGA program with ProSite, and every policyholder is entitled to 2 annually, 2 per year, with Claus & Miller Law Firm, which is an internationally recognized and internationally placed program, law firm. And these guys have experience with A&E. So they're not just someone who's cutting a carrier a good rate and saying, hey, let's use these guys for contract reviews. These are A&E professionals that know the ins and outs of the industry and some of the contract concerns and things like that. So that kind of ties into that last slide when I'm saying you need to choose the right partner, and I think it's worth the discussion when you're face-to-face with these clients of yours. Some of those other bullet points, like the free risk management, I know that's kind of a general term, and each carrier has different definitions and offerings for that. But think about the core of it and what it does. Your insureds are going to sign better contracts, and you're also giving the lawyer, the legal representation, the opportunity to discuss these things one-on-one with the insured so they can avoid some of the litigation that's likely to face them in the future. I kind of talked a little bit about how the carriers can help, but I also firmly believe that the insured can help themselves in many ways. And perhaps the single most important way they can help themselves is by using effective contracts. The truth is, it's a competitive world out there, and when we talk about architects and engineers, these individuals are at a significantly higher risk of a suit or a claim than a lot of other types of professionals out there. It's true, it's reflected in the marketplace, and it is what it is. Using these contracts is, it's vital. It's so important as far as a risk mitigation procedure. And actually, just a point to that second bullet point, I mean, I put up there it should be used 100% of the time no matter what. Some of our markets won't even quote an account if they're not using written contracts. Notice I said written, not verbal. Must be written. And we'll go into a little bit of detail here. But, you know, think about the whole scenario, too. Like, when you guys are face-to-face with these applicants, they're the ones doing the work, but they may not necessarily be the ones that did all of the planning or designed the contract or the high-level CEO types. Generally speaking, the architect or the engineer could be the low man on the totem pole, you know, in many instances. And, you know, when you think about the higher-ups that formulate the contracts, there are some very real disconnects, you know, that take place every day, and it's not good. I kind of mentioned that the carriers oftentimes will require the written contracts. I mean, I cannot stress enough. It seems like common sense, but it's 2013. It needs to be written. And I know a lot of these people, you know, I see it every day. Oh, you know, the guy that's doing it part-time, maybe he's partially retired, do it on a handshake. You know, it's all fun and games till something goes wrong. And I'll give you a good example of that later. Limited scope of services, that's second to the last bullet point, hugely important. It's one of the best things they can do, and quite frankly, the insureds need to stick to it. Kind of like I mentioned, the nice guy doing the work there, you don't want to do any favors just by being nice. I mean, sure, it sounds great and it looks great and it's good customer service, but think about it from a liability standpoint. If you're doing something that's not defined in that contract, you're now liable for that. And that's all there is to it. That's the bottom line. If it's not expressed in that contract, do not do it. Seems like common sense, but it happens every day. And if something does change, you know, we all know the projects change. It happens. Nothing finishes the way it's planned. I get that. Everyone gets that. But the point we need to make here is that if the contract does need changed, if the work is going to change, all of the parties really need to get together, sit down, revise the contract. I mean, you're talking about something like a simple neglect of a clear and defined project scope, and I'm telling you, that's where most of the claims start. That last one, a limitation of liability clause, again, I know I'm talking in general terms here today. A limitation of liability clause can do a lot of things, and it can be crafted a bunch of different ways, but at the end of the day, what that is there for is to protect the insured, to protect the person doing the work. If you're a professional working on a project and you don't have a limitation of liability clause, legally speaking, in most areas, you have an accountability or at least a legal liability for basically the entire project. I mean, think about a project with 3 guys working on it, and only one of those guys is insured. Well, what do you think is going to happen if something goes wrong? Exactly. The claim's going to come to the guy with the insurance, even if it's not his fault. He was a part of the project. You know, he may not have been directly at fault, but liability comes in. The lawyers are going to sniff it out, and it sounds bad to say it, but that is the harsh but cruel reality of it. I kind of keep using the term common sense, and really this slide, that's the exclamation point. If we have to give any advice to people, these 4 bullet points, I mean, it shouldn't even require any thought, but again, unfortunately, it happens every day. I'm just going to go through them. I mean, written contracts, they need to be used always. No ifs, ands, or buts about it. And again, speaking from the carrier perspective, some of the best risks in the world, they might be trained and educated and 40 years of experience and been honored on national platforms. Doesn't matter. If they're not using written contracts, some of the carriers won't even look at them. So it's a good practice to put into place. Even if the current carrier doesn't require it, it's going to help everyone out in the long term. Another common sense item, don't sign anything unless you know what's in front of you. Perfect advice you can give to the clients as you're talking about their insurance and their liability needs. And you know, even that last one, if you don't understand it, call a lawyer. Maybe you're a policy holder of ours, and we have the risk mitigation procedures in place. or the offerings, depending which carrier they're with. If you don't understand it, though, you need to figure that out. Consult with legal counsel, do whatever you've got to do. But if you don't understand it, you should not sign it. Which kind of brings us to the whole point of why we're here today. How can we help you? My role in this, personally, as an underwriter or a broker, depending on who I'm working with here, let me know what you need. I am not the one, me or any other underwriter for that matter. We're not the ones that are sitting down face-to-face with the insured. We're working with licensed professionals. We're sort of reliant on our producers to provide us with what you're looking for. I mentioned those 7 markets, and again, we've got varying relationships with some of them. I've got full MGA quoting and issuing authority with some. I've got others where I literally refer it up to a different underwriter. I need to know what you're looking for, what their concerns are, and if we know that, we can help you better place it. With those points I mentioned earlier, price is obviously a part of it, but there's a lot more that goes into it when finding the right partner. Specimen language. Every single quote that leaves our office for the A&E program, no matter which carrier it's with, is going to get specimen policy language. Some people don't read a single word of it. Others will sit down with a lawyer and spend an entire month looking at it. Either way, it's there. It should be used. It's there as a help for our producers and our insured. And I would hope that they take the time to check them out. Again, risk mitigation features. Again, I know I'm talking kind of in general terms today. It's literally impossible to go through every single offering from every single carrier in one webinar. But again, just be cautious and cognizant of what the offerings are, what might better suit a certain client. Like I mentioned, like we've got the contract review service with ProSite. Well, if we're talking about a new company that doesn't have a contract in place yet, that's going to be an invaluable service to them going forward. Whereas someone who might have 20 years of experience, they might have already crafted their own contracts, or heck, they probably have their own in-house legal counsel. So maybe they're going to benefit more by going with a carrier like say a Beasley on a larger risk, where they're going to get some credits for attending certain risk mitigation discussions like this one, where they're going to get credits built in. So again, it's really taken the time to understand the needs of each of these applicants. So I'm looking at the clock. I'm right at that 30-minute mark, and we're going to wrap it up here, but there are two fun things I want to kind of just leave you with before we go. I've talked at length about some general issues in the design industry, and I'm going to give you 2 scenarios here. These are actual accounts that we wrote during the last however many years. Both of these accounts have had claims. Neither one of them saw it coming. But I want you to kind of think about some of the things we've been talking about, and those questions down there at the bottom. Keep those in your head as I'm telling you these. Maybe what could they have done differently? Did they take the right steps to minimize their risk? Or were these claims baseless? I mean, you be the judge. But each of these were defended. So the first one is funny, scary at the same time. I forget what year it was, but basically there was a 3-story building, right? The lower level of the building was essentially built into like a hillside. So like 3/4 of the building were underground, and the back 4th was kind of like it opened out into a hillside, right? Well, the concrete, the foundation of the building started crumbling, and of course, they start looking at it and everything, and the building, by the way, is at this point approximately 30 years old, and they trace the history, and they go back to the architect, and they sued him because of a structural defect in the design of the building. Okay, think about that. 30 years later, they went after the guy who designed the building, okay? So the engineer, they fight back, or the architect, I should say, fights back, and after the whole thing was investigated, and everyone's involved now, and everyone's prices are going up, it becomes clear that the reason the foundation is starting to crumble and having these mold issues and all that is that a tree that is growing, near the building, the roots are basically so large and I guess just powerful over the course of time that they're basically destroying that side of the foundation. So what do? They go after the guy that planted the tree, no joke. They go after the landscape architect who over 30 years ago planted a tree on the hillside of a 3-story building and basically said that he should have known it was too close, yada, 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 whatever the allegations were, over 30 years ago. So this guy, he's retired. He's out of the game. He's, sitting on a beach somewhere probably, but he had retired and sold his business. And this doesn't happen all the time, but luckily in this case, the new owners of the business had actually kept up on the insurance. And, with the predecessor firm language, this was actually addressed and covered by a carrier. And at the end of the day, it was taken care of, but it was a large payout. You're talking about a foundation restructuring from a 30-year-old project, and it was taken care of. Again, keep in mind, maybe some things could have been done different. Was it a baseless claim? I don't know, but that's what happened. And the second example I'll give you, this is an example of an architect who took a job and actually from an underwriting standpoint was golden. This guy, he used a contract that was approved. It actually had a $50,000 limitation of liability clause that was well crafted. Nothing goofy about it. During the course of his work, though, he assisted on fixing a foundation issue. Long story short, the final result didn't really satisfy the client's wife. And I will put an asterisk on that. These clients are incredibly wealthy, okay? So keep that in mind, too. Our insured, again, did everything he was supposed to do. He offered to fix it free of charge. He offered to bring in a team, their team of their choice, and offset the cost. But they were not having it. The clients were not having it. So it goes through the legal process, and in one of the first phases of the legal process, a judge actually threw out that limitation of liability. Think about that. At worst case scenario, we should have only been on the hook to defend $50,000. Our insured only should have been liable for $50,000. That client signed that contract. On the worst day, it should have been $50,000 paid and done. And again, keep in mind, that insured offered to fix everything, do it the right way, do the right thing. And instead, the judge they proceed to the litigation process. The judge throws out the limitation of liability, and we ended up the cost to fix everything and get it to the point where it was. I come to find out there was some soil issues, I guess, when they did work there. That ended up costing us over $900,000. Honestly, I don't even know if it's been closed out yet, but that was a $900,000 incurrence by the carrier defending that situation. So again, think about how important some of these contracts are. Did that guy do some stuff that wasn't clearly defined? Maybe, maybe not. But here's a guy that underwriting viewed as the role model and still cost almost $1 million. That pretty much wraps up what the discussion today. Again, it was kind of a 101 general discussion. I've got some submission contacts up there. To any of you that have worked with us before, you're probably going to be dealing with me directly for a lot of the A&E accounts, but you can send them to Jerry or Dwight or myself. We've also got the general submission inbox there. If you like snail mail, be my guest. There's our mailing address. Got our website listed. Check it out. Like I mentioned at the beginning, we have a lot more programs just than what we're talking about today. And we're definitely here for you guys. If you need some help, let us know. Q&A. I've got some people feeding me some questions over the past couple minutes. A couple of them are kind of been looks like being repeated. So I am going to touch on a couple, and if there's more, I know I'm over my 30 minutes now. So I'm just going to pick a couple, and the rest I'm going to respond to individually. First question says, you said market is hardening and prices are going up. How much are they increasing? Well, honestly, that's hard to give you an exact figure. And keep in mind, there are some other variables that come into play at renewal time, especially as the economy is rebounding. We're seeing revenues going up a little bit. which is, that's a direct rating factor for professional liability. So that's going to come into play as well. Generally speaking, though, in the middle market sized accounts, we're seeing about a 5 to 10% increase pretty much across the board. Percentage-wise, it's really not that high, but when you consider the middle market size accounts, those can be some pretty big premium hikes. Our program here, the Aspire A&E program, we're gunning for those, the smaller risks in the market space. Probably fair to say a 5 to 10 increase as well. The minimum premium ones are typically level, flat renewals. An interesting point to that, a lot of the carriers, they're not even getting the increases they want. And that kind of tied into what I said earlier. You had those boom years, now you have the small guys on the chain taking contracts they might not be, versed in. So the claims are everywhere. The claims are all over the A&E space. And these carriers, they're trying to recoup some of their costs. But quite frankly, it's really difficult because when you slap a 10% increase on someone, they're just going to go shop it. And, I'm sure you guys see this too. It's almost like last set of eyes wins in several cases. So they're not getting what they want. I think a lot of these carriers, I don't want to speak for any specifically, but the communication I have with them daily, they're wanting more than they're seeing. So it's really not that big of a surprise. Here's another one. I mentioned some larger accounts. I thought Aspire was a program for small risk. Yeah, okay, actually that's a great one. Again, especially for those of you who are not familiar with this, the program for the Aspire Architects and Engineers coverage was launched at that time in 08-09 specifically only for risks that made $1.5 million in revenue or less. At that point in time, if you made more or you needed higher limits, basically that's where the discussion ended. Right now, today, we have a couple of markets where we have full issuing authority. I've got some broker authority. Really just kind of depends on the situation. But internally, we still go after the small, the micro business, the 1.5 million and less. But we can also quote higher today. Just internally, we can quote 2 million limits per occurrence. Obviously, the risk would have to be qualified. They can't be doing anything goofy. But even if they need more than that, we can go up to 5 million, and in some cases 10 million for the really large accounts. So again, it kind of that point earlier. Every market's different. Every market has a different appetite. They all want to play in different spaces. But yeah, right now today, if they're making 10,000 a year or if they're making 10 million a year, we have a home for them. So keep that in mind. And really just, I guess, the last point kind of ties into what I said earlier. Let us know how we can help you. If you're an A&E specialist, like if you're a larger broker and you're only accessing us for our MGA programs, that's great. Just let us know, though, because if not, we might be going to the same market. Or say some of our larger GL producers, they might have a direct contract with a company like, say, Travelers, but maybe Travelers isn't a market for them for this risk. Just let us know. Let me know when you send in a submission what your needs are, and we're going to craft it, craft our proposal to best suit you. And if we can't do it, if it's going to be a declination for whatever reason, we're going to tell you up front so we don't waste your time. So with that said, I thank everybody for joining. Keep an eye out. We're going to keep the webinar series going. We're going to have different specific topics like the risk mitigation. And for any of you that are new producers to Stuckey Company, feel free to reach out to us. I can give you a crash course on our in-house programs. And hope you have a great day. Thanks for joining, and we will talk to you soon.